Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. How do you fundamentally analyze a mining company? How do you find red flags in that mining company and then eliminate them quickly? What research and due diligence should you be doing before you purchase a stock? Today we have Jordan Roosh of the YouTube channel Mining Stock Monkey. Jordan regularly breaks down the fundamentals of resource mining companies, and a lot of these companies we're also invested in and are looking at on the charts. Jordan, thank you for coming on the show.
Hey, thanks for having me. Appreciate it.
Yes, thank you for coming on. Pleasure's all on this side of the table. Go ahead and, this is your first time on the channel, so go ahead and give us your story and how you got into researching companies fundamentally, and yeah, tell us how you got started.
Sure. Well, growing up, I was always pretty good with numbers. And then my dad became an investment advisor. And then that kind of got me interested in stocks. And I got interested in the precious metals. So I kind of started there and basically started right when I started college, more or less. So been doing this for about 17 years.
Okay, and did you get a degree in this, or are you all self-taught?
I mean, I hate to call myself self-taught because I've learned so much from books and unofficial mentors and things like that. But yeah, lots of reading, lots of studying. I got a business degree, but it wasn't in this by any means.
Okay,
Mhm.
okay. You know, we got a question on a book. Do you have any books that you would recommend for a beginner?
For a beginner, this one, Intelligent Investor.
Benjamin Graham.
Uh, yeah. Also, what's the name of it? Let me look quickly. The basics of understanding financial statements. So if you're not good with like accounting and things like that, read that. It breaks it down in a very simple way to understand. And then if you want to get something more advanced, we go with the other Benjamin Graham book. What's it called? A security analysis. I have it right here. This one.
It looks like a pretty thick one. Okay.
It is. Not an easy read. So if you're starting out, I recommend starting with an easier one.
Okay. Okay. Awesome. Thank you. Got three of them right there in order of importance. All right. Let's get started. What are some of the basics that you look at to first eliminate? 90% of these companies are probably not worth looking at. How do you eliminate that 90% quickly?
Sure. The first thing I'm probably going to look at is how much stock does management own? Because if they don't own any stock, what motivation do they have for the share price to go up? Probably not much. And then also, I'm going to look at their balance sheet. Do their current assets exceed their current liabilities? And also, how much of a runway do they have? So, what are their annual expenses, and how long can they survive going forward without raising any more money? Well, if they're a pre-revenue company. What else here? Also, has management been successful in the past? If they haven't, I mean, maybe they'll be successful, but there's so many people, or well, there's a pretty good number of people who've had success in the past. So you might as well just stick with those because that's going to increase your chances of success a lot. And with those things, you can eliminate a lot of the companies right away.
Okay, okay. So you look at how much stock does management own? If they only own maybe a year or two worth of their salary, move on to the next one, right? You also look at their balance sheet. You look at their past successes. This is one that I've had difficulty finding. How do you find a guy that is now in charge of this mining company, other projects that he's done? Where are you going to look for that?
Well, you could ask him, but Google is going to be your friend. You're going to have to do some research unless you've been around the space for quite a while and have seen the guy do projects in the past. But you could also just stick with the biggest names in the business. Stick with the Ross Beatty, Robert Quartermain, who else? The Ivanhoe guy, Robert Friedland.
Robert Friedland.
There,
Yeah.
there's a handful of really big names in there who've been successful many, many times.
Okay. Okay. All right. And now, now that we've eliminated those 9 out of 10 and we've focused it down to, I'm just making this up, 10%, what do you look at next?
Yeah, so I'm going to look at, do I like the business model? It is very rare that I'm investing in early stage exploration, for example. Now, I might if they've already discovered something awesome and the initial market excitement is gone, but there's still potentially something very good there. And do I see a path to the share price going up other than the commodity price going up? Now, I may invest in a company if on the basis of a commodity price going up, if that commodity is deeply out of favor. But for example, let's take gold right now. Gold is near all-time highs. It's not out of favor. I mean, you could argue that the mining stocks are out of favor, but the commodity itself is not. And if you're considering investing in a gold producer and your only way to win is if the gold price goes up faster than that producer's expenses, I don't like that math because there's so many things that can go wrong in gold mining. Now, I mean, maybe if the company's cheap enough, if the company's trading at a substantial discount to what I think its current value is, but in a case like that, yeah, I'm probably not going to invest unless it's at a big discount.
Okay, all right. So you're looking at their business model, you're looking at their forward growth, their path, and you want to bet on a company that doesn't need the price of the commodity they're pulling out of the ground to go up. The price of their shares should go up, even if the commodity price does not.
Yeah, I just want other ways to win. Like, I think the gold price is going to go up, but for me, that's not good enough because there's other companies where the gold price doesn't have to go up for the share price to go up. For example, they're building a big growth project right now, and a year from now, they're going to be producing a lot more ounces at a lower cost. If they're successful at building that mine and they can get that ramped up, well, then the share price in all likelihood is going to go up, even if the gold price stays the same, or perhaps even if it goes down.
Yeah, that's a good point because what they can control is their operations, but they can't control the commodity price.
Mhm.
Okay. What about going to your due diligence, going over the quarterly annual reports, maybe comparing them to other like companies?
Yeah, so if it passes all my initial filters, then I'm going to probably print out all the quarterly and annual reports recently. And then I'm probably also going to go on to Seeking Alpha if I'm new to the company, and I'll print out all the recent articles that people wrote about them. Now, most of those articles don't dive very deep into the company. So if you're already familiar with the company, you're not going to learn much there. But if you don't know anything about the company, well, then you're going to get some good tidbits of information from that. And then from that, I'm literally going to have hundreds and hundreds of pages to read. And then I'm just going to sit down in my chair for a couple of days and read. It's really, really boring work. I mean, I like it, but I mean, for the average person, it's probably going to be pretty boring.
Okay, you're getting into all their proxies, everything, printing them out, and basically being a hermit for 3 days going through them.
More or less, yeah. And I mean, reading those quarterly and annual reports, they're legally required to tell you a lot of stuff that they're not going to tell you in these CEO interviews that you see on YouTube, and they're not going to tell you in their company presentation that you see on their website. But you'll find out some crazy stuff in those that'll be like, nope, all in the trash right now. Not even going to read another line.
Okay, yeah, we have to remember that when we're watching those, that it's a sales pitch.
Mhm.
Yeah.
Yes, absolutely.
Okay. All right. So if someone did not want to spend 3 days looking over quarterly and annual reports and reading the proxy statements, you have a newsletter service where we essentially hire you to do this for us.
Yes, I actually have two different newsletters now. So they're both what I'm doing with my own money. There's there's one main one, and that's where most of the content is going to be. However, there's another one that I just recently launched that has a higher price. And that one, and the reason for that one is because I could not share less liquid stocks in my one newsletter because it would affect the price too much. And I've seen what happens when a popular newsletter writer recommends a stock that's not liquid enough. The stock price shoots up very rapidly, maybe even doubles. And then lots of the newsletter subscribers get in at a bad price. And then over time, that stock price slowly goes back down to where it was before the recommendation. And then you have all of these people who got in at a bad price are super disappointed because they're already down 25, 50%. So it's just not good to recommend an illiquid stock to too many people at one time. It just doesn't work. So that's why I launched a second, more expensive newsletter that tends to be more illiquid, tends to be higher risk, higher reward. But the one newsletter, that's basically giving you my best research from all these hours and hours of reading that I'm doing every day. You're getting the little tidbits of my very best research and learning what I'm doing with my own money before I buy or sell.
Before you buy or sell.
Yes.
That's pretty cool. I've seen a little bit of that with my YouTube channel. When I have a CEO on, I can see a blip in the stock, and I got to believe when you look at the volumes and stuff, it's because he came on the channel. So I can only imagine if you have a really illiquid one, you know, maybe a company that's worth 20 million or something, where that could certainly be exaggerated.
Yeah, it can do a lot to the share price, especially if people are placing market orders.
Yeah. Yeah.
It, you can buy a lot of shares without moving the share price too much, but you gotta place a limit order and you gotta be patient. Sometimes it might take a week or a month to get your order totally filled, but with patience, you can buy a substantial amount of shares in these companies.
Yeah, yeah. Okay, there will be a link down in the pinned comment below to your service. What's the cost per month and for both services?
The more expensive one starts at $300 per quarter, and the cheaper one is as low as $15 a month.
That's pretty incredible. Okay, all right. I'm excited. I'm gonna try it out. I will be there as well. If you want to join us, it's an affiliate link. Jordan's been nice enough to kick a little bit back to the show, so I will see you there on Mining Stock Monkey. I'm excited. Okay, Lost Cause wants to know a listener question. He says, "Where does Jordan see the best value currently? Oil, gas, coal, or something else?"
Well, there's a lot of oil and gas companies that are crazy cheap. Those companies are making a lot of money at these oil prices, and the valuations are very, very good. And then another one are these mid-tier gold producers that have growth projects that they're building right now. Or maybe they even just completed building. For example, Equinox Gold is one of those. They just completed building their Greenstone mine, but the market hasn't given them credit for that yet. And what this is going to do, it's going to increase their production a lot. It's going to make them approximately 1 million ounce per year producer. It's going to lower their all-in sustaining costs substantially. It's going to increase or improve their political risk substantially because this is going to be their biggest mine, their lowest cost mine, and it's in their best location in Canada. So it's going to do a lot of good things for the company. Now, there's some risks there because the company has a lot of debt. They've taken on a lot of debt to build that Greenstone mine and to buy the other 40% that they didn't own. However, with the money they're going to be making, if gold prices stay anywhere near $2,400, I think that one's going to be an incredible buy here. And then there's one like B2 Gold. This is another mid-tier gold producer. They're building a mine up in Canada as well. For the first 5 years, it's going to produce over 300,000 ounces a year. Now, that will be in production about a year from now. And you get paid about a 6% dividend while you wait. And then I think after that gets into production, well, it's going to lower their cost a lot. It's going to diversify the company more, and it's going to improve their political risk jurisdiction profile. So B2 Gold and Equinox Gold are two mid-tier producers with growth that I think are really, really great buys right now. And I think they're stupid cheap at these prices.
Okay. Okay. So number one, you like oil. You think that they're printing money at these oil prices. And then you also like after that the mid-tier gold producers, and we got a couple of picks out of you, Equinox and B2 Gold.
Yeah, and by the way, if I say I really like a company, you can probably assume that I own shares in those companies.
Okay. You eat your own cooking. Okay, you also follow uranium, correct?
Yes, I was following it closer a couple of years ago before the uranium price ran way up. But yes, I've been looking for a time to get back in, and I feel like we might be getting close to a time where I can make that happen.
Okay, Donna's got a question about Kazatomprom. Do you follow Kazatomprom at all? She's asking, is it best to avoid for now and stay with Cameco? How do you feel about Kazatomprom?
Personally, I would be willing to take the political risk. However, I think a lot of other people are not willing to. And because of what I think other people would do, I would probably stick with Cameco. But I'm
Okay.
also a little bit nervous about Cameco integrating, I think it was Westinghouse. So they're not just going to be a uranium producer like they have been, like they've proven that they're able to do, but now they bought Westinghouse and now they're going to be selling electricity, not just the uranium. So uh, there's that big question mark there of whether they'll be able to make that happen successfully. But yeah, I would personally choose Cameco over Kazatomprom, even though Kazatomprom on paper is cheaper.
Okay. Okay. All right. Do you have any insight into the recent tax implications that they've gone through there, or have you not heard of that?
In Kazakhstan,
Yeah.
I don't know enough about it to comment.
Okay. All right. She asks where you can buy it, and Donna, I've bought it on Interactive Brokers. That was the only avenue I could find it. Okay. Think wants to know, are you seeing any opportunities in the Norwegian oil and gas sector?
I also don't know enough to comment on that one either.
Okay. And grow less certain every day. Like the screen name. Great choice of guest, Steve. Looking forward to it. As am I, sir. I'd like to ask him why he seems to like Agnico Eagle so much less than Rick Rule and Adrian Day.
Great question. You know, I hate to disagree with those guys because I look up to both of them. I respect their opinions a lot. And they've been around a lot longer than I have. They have a lot more experience than me. So maybe you should just listen to them and not listen to anything I have to say about Agnico Eagle. But why I like Agnico Eagle less than they do. First of all, I want to say I think it's a great company. Over the past approximately 10 years, they've grown their free cash flow per share by 2.5 times. That's great. And it's more than most gold producers can say. There aren't many gold producers who've grown their cash flow per share over the last 10 years. So that's a very good sign. But what don't I like? Well, like I mentioned earlier, I don't want to just rely on the gold price going up. And Agnico Eagle has basically no growth in sight. They're producing quite a few ounces of gold. I think they're almost at 3 million ounces a year. And it takes a lot to move the needle for a company the size of Agnico Eagle. Now, they recently announced that they're increasing production at their Detour Lake mine to, I think it's 1 million ounces per year, but that's going to take 3 or 4 years for that to happen. And when you add 200,000 ounces of production over 4 years to a company that's already producing 3 million ounces a year, that's like, I can do the math in my head, 7 or 8% growth in production over 3 or 4 years, which isn't much at all.
Yeah.
So basically, to win with Agnico Eagle, for your share price to go up, the gold price has to go up faster than their costs go up. And I would rather invest in a company where I have more ways to win. But you know what? Agnico Eagle, they're a pure gold producer and they're in tier 1 jurisdictions. So people really like that. They have a strong balance sheet also. But something I don't like is that they're expanding out of gold. They recently invested in a project in Mexico that isn't gold. Now, I don't like Mexico as a jurisdiction right now, especially after this new president. And I think that if they start expanding out of gold, they're going to lose that huge premium that they enjoy. So I mentioned that they have grown cash flow per share over the last 10 years by 2.5 times. But now the company is a lot bigger than it was 10 years ago. And it takes a lot more to grow a company of this size than it did to grow a company what it was 10 years ago. So I doubt their ability to continue growing cash flow per share, at least at that rate. Maybe they can continue doing it, but at a slower rate. And also, management doesn't own enough stock. Management is like, if I remember right, 1 or 2 times their annual salary. Whereas, like, for example, Mark Bristow of Barrick, he owns 10 times his annual salary. And also former CEO, and I think he's the chairman right now, Sean Boyd, he has been selling a lot of stock. So there's some reasons why I'm not investing in Agnico Eagle. But all that to say, if the gold price goes up, I think the stock price will go up. But I don't want to depend on the gold price going up.
Okay, all right. So basically, you don't see growth coming out of this or the share price going up unless gold goes up. They're expanding out of gold, which is one of the main reasons you want to be in it, is because it's maybe not a pure play on gold, but close to it. And management doesn't own enough stock. They don't have enough skin in the game.
That's my view.
Okay. What you alluded to it. It sounds like you like Barrick more than you like Agnico Eagle.
If I had to choose one of the majors to buy between Barrick, Agnico Eagle, and Newmont, it would be Barrick. They have the best growth pipeline. Agnico Eagles is basically going to be staying flat, maybe growing a little bit with a new Detour Gold or Detour Lake announcement. And then Newmont's production is going to be decreasing quite a bit because they're going to be selling off quite a few of their assets to pay down their debt and focus on their very best mines, which is probably a good thing for the company. But the market typically doesn't like to see a decreasing growth profile. But of the majors, well, of any gold company, Barrick has the best pipeline. They're going to grow a lot. You have to be willing to take some political risk, but at least it's diversified political risk. And I would rather get a big discount to buy a company that has diversified political risk than pay a big premium for a company in safe jurisdictions. Like, a lot can go wrong in gold mining. We just saw that heap leach failure from Victoria Gold. People were investing in it. They're like, hey, I like the management team. I like that it's in Canada. But you know what? They had that failure, and now it looks like the company is going to go bankrupt.
Yeah, that fell by like 80% a day or something like that. It was
Yeah, so even if you think your investment is relatively safe, like there's a ton of things that can go wrong in gold mining, and I want to get a substantial discount to buy a gold miner, and I think Barrick fits that criteria.
okay. I'll get more of a line when I join your service, but it sounds to me like you're focusing more on companies that are already pulling this metal out of the ground. They have numbers, they have statements that you can follow and track and predict, and you're not focusing as much on drill holes.
Yeah, well, there are some exploration plays that I'm interested in, but a lot of them aren't liquid enough to share in that newsletter. So yeah, with that, I'm mostly focusing on producers, but also prospect generators, royalty companies. I really like those business models. So I think that's a really good place to be as well.
Okay, cool. Unite wants to know. He said, I'd love to get his thoughts on Seabridge Gold.
Seabridge, it's in a safe jurisdiction. Canada, if I remember right, or is it Alaska? one of those two.
Canada.
It's north of where I am.
Canada, yeah.
Enormous deposit that they have over 100 million ounces of gold. It's one of the world's biggest deposits of gold. And then there's also a substantial amount of copper. That company has a lot of leverage to higher gold prices. But lots of leverage means it's a high cost operation. So you also have a lot of leverage on the downside. Now, there's two potentially interesting catalysts that could really propel that share price coming up, I think. Number one is if they get that substantially started designation from the government. They've already spent 300 million, 400 million developing the deposit or developing things around it, building infrastructure, things like that. And they applied for this substantially started designation. And if they get that designation, their permits are valid for the life of the project. Now, they're only permitted, I say only, they're only permitted to mine about 30 million ounces of gold, which is 1 million ounces per year for 30 years. So it's still a substantial amount, but it's only a small portion of what they could possibly mine there. But it would be great to see those permits valid forever, and that would help a major come in and partner with them and share those project expenses, because it's going to cost a lot of money to build that KSM mine. And then that's a second big potential catalyst that could be coming up that could really propel the share price, and that is them announcing a partnership with a major, or a partnership with a well-funded company who can take on a substantial amount of those expenses to build the mine. So
Okay.
I don't own it, but I'm interested in it.
Okay. Okay. 100 million ounces of gold. I actually interviewed Rudy Frank recently, and he said they're up to 59 billion pounds of copper. So just an incredible copper deposit. I asked Adrian Day about this one, and he said basically the same thing that you did, that it is so leveraged to the gold price. He likes it as a trading vehicle. But yeah, that's very interesting. And that substantially started by the government basically means, okay, you're good to go for the life of the mine here. We don't have to keep renewing these permits. You've gone far enough that we're giving you the stamp to go forward from here.
Yeah, it's already fully permitted, but they just want that permit to be valid forever and not expire.
Ah, okay, okay, cool. All right, Leo wants to know. Please ask Jordan's opinion on Newfound Gold Corporation.
This is also one I don't own, but I'm interested in, because they've had incredible drill results. Their mineralization is basically right at surface. It's right next to infrastructure, which is pretty rare these days. I mean, a lot of these you have the deposit 300 kilometers from the nearest power line and from the nearest roads and things like that. And when it's close to infrastructure, it's a heck of a lot cheaper to build. So I'm very interested in what they're doing there. And they have a huge land package, and this mineralization seems to extend for kilometers upon kilometers, and they just keep drilling and they keep finding more. The reason I don't own it yet is because I don't feel like I have the skill set to model how much it's worth. And that makes me nervous, because it's not a cheap company. It's north of $500 million, and it's just exploration. They haven't done any economic studies yet. So we don't have any PEA or PFS to go off of. And they just keep drilling and drilling, and they're spending a lot of money, and they're raising a lot of money, and they're increasing the share count a lot. So that makes me nervous if they're going to keep doing that. But I really like what they're finding, and it's Eric Sprott's biggest investment ever. And I think his average share price that he bought shares for is more than double today's share price, which, I mean, that alone makes it attractive to me. But yeah, I'm not investing because I feel like I don't know enough yet.
Okay, well, that's an authentic response. Higgs wants to know, really curious about his take on I-80 gold.
So they have development assets in Nevada. So great jurisdiction. They're getting awesome drill results there. And they have pretty valuable infrastructure as well. If they can do what they want to do, it could be a home run. But again, this is one of those where I was interested in it, and I became interested in it because their biggest shareholder had finally sold all their shares. That was Equinox Gold. Equinox needed the cash, So they sold all their I-80 shares, which I think helped to push down the price in the market. So that's when I was like, okay, this looks interesting. And so that's when I printed off hundreds of pages and I went into hermit mode for a few days, just reading and reading and reading. And they've had to dilute shareholders a lot. Their balance sheet doesn't look great going forward. Like they don't have a big runway, and they're trying to build 3 projects simultaneously, if I remember right. And it just got, I thought it was pretty complicated. And so far, the management team hasn't been able to do what they said they were going to do. And that makes me nervous as well. And after a more recent financing, there's a ton of cheap warrants out as well, which could affect the potential upside for it. So I ended up deciding against investing in it. But I'm still attracted to it. I'm just nervous. And I feel like I don't understand it well enough. And it was kind of complicated.
Okay. If it's too complicated, then don't invest in something you don't understand. Yeah, very cool. Do you have any final thoughts before we sign off here, Jordan? Anything else you want to leave the viewers with?
You know, Steve, you're a much better interviewer than I am interviewee, and I think you covered a lot of things very well.
Well, thank you. I appreciate that. No, you did awesome. I'm looking forward to joining your subscription service. That is going to be a lot of fun. My weakness is fundamentally investing in stocks. I love looking at the charts. I love finding patterns. That's my strength. But as far as digging into the financial statements, I will gladly pay you $15 a month, sir, to do that for me. So thank you in advance for that.
Thanks. I appreciate it.
Yes. If you guys want to join me over at Mining Stock Monkey, there is a link in the pinned comment below. Jordan, thank you again for coming on the show. You have a wonderful day, sir.
Thanks, Steve. Talk soon.
And thank you for tuning in. Share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.